All right, folks. Molly, we're good, right?
Everything looks good. Yep. And just make sure you hit record, and then I'm gonna leave this and you start the webinar.
Wonderful. Thank you so much for your help, Molly.
Yep, of course. Bye.
Philip and Sam, are you ready?
Yep, ready.
Philip, you good?
Yep.
Wonderful. All right. Hello, everyone. Thank you for joining us for our webinar, From 4,000 to Over 30,000, What You Wish You Knew About Cryptocurrency Markets in 2020. My name is Jeff Billingham. I'm the VP of Capital Markets here at Chainalysis. I'm joined by my colleagues Philip Gradwell, Chief Economist, and Samantha Stutman, Financial Institutions Lead. So today, we'll provide a brief background on Chainalysis, discuss the market metrics we find most interesting to explain the 2020 market, provide an outlook for the 2021 market, and give you the resources to get in touch if you find this data compelling. You'll leave this session with clarity on how you can leverage our data to educate your team or your investors and make data-driven cryptocurrency investment decisions. A little bit about Chainalysis. Chainalysis is a data company built to enable both the public and private sector to support and capitalize on the opportunities the cryptocurrency markets present. We work with over 300 customers across the globe to provide the regulatory and market data infrastructure that helps the crypto economy grow. With that, Philip, I'll hand it off to you.
Thanks, Jeff. So I'm Philip, the Chief Economist at Chainalysis. And as Jeff introed, I'm going to take you through what you wish you knew in 2020. And that's because 2020 was an unpredictable year in this world. It's one perhaps some of us wish we could leave behind. But in terms of the performance of cryptocurrencies, it was a stellar year. So there was a 642% low to high increase in the price. And what's interesting is if you were watching the data through that year, you could have picked up on that signal. So what did you wish you knew over the last year? The data I'm about to show you. If you were able to track that, you might have been able to make some of these good investment decisions in an otherwise very difficult year. But to start with the big picture, why is Bitcoin seeing this type of performance? Well, it is because Bitcoin is fundamentally a scarce asset. There will only ever be 21 million Bitcoin produced. And it's a scarce asset in a mature industry. For those of you who are following cryptocurrencies back in 2017, the last time we had prices this high, it really was a different story. There wasn't the compliance in place. There wasn't the ability to buy Bitcoin with such ease. There wasn't the market depth. But in 2020, and really, especially now in 2021, the industry has matured. Cryptocurrency is much safer. It's the ways in which you can trade, ways in which you can custody have all matured substantially. So it's this scarce asset in a mature industry, and it's been a year of monetary expansion. So unlimited amounts of money printing, unprecedented levels of economic uncertainty. And that means that people have piled into Bitcoin to buy it as an asset that they think will remain or retain its value, indeed appreciate, even though there's a price volatility, while all other assets might have losses or be inflated away. And that's really shown by the fact that so much Bitcoin is actually held by traders, by investors. They hold about 56% of all Bitcoin. There's another 3.7 million Bitcoin, which is about 18%, which we believe is lost. So it's not even there's only going to be 21 million ever produced. There's actually much less of that will ever be available. And then there's a remainder that's held by traders. So that's your sort of free float where you can actually come and buy Bitcoin. And as I'm going to explain, that declined significantly this year. And of course, there's some Bitcoin that remains to be mined. So about 2.4 million left. So overall, Bitcoin, the scarce asset, and really this year, people started chasing after that scarcity. And that's so clear in the data when we look at the holdings by type of investor or trader. So the orange line here shows the amount of Bitcoin held by investors set to zero in start of 2017, so we can see the change since then. I've just annotated this chart with some arrows to show the trend that I looked at earlier this year. We saw that investors kept their holdings relatively flat from the last time Bitcoin went above 10K in 2019 up until mid-March. At that time, Bitcoin had a big price sell-off, as did all other financial assets. What is interesting is that after that, when people really started to understand the economic consequences of COVID, that is when investors really started to pick up their accumulation of Bitcoin. And then in yellow, this is the amount of Bitcoin held by traders. It's the free float of Bitcoin. If you go into the market, how much is easily available to be purchased? And that amount declined significantly as the investors started buying up. So there was strong investor demand and also reducing liquidity after mid-March. At Chainalysis, we can uniquely understand the place in the world where the cryptocurrency activity is happening. And we, through this data, are able to see that it wasn't just investors who were buying Bitcoin from mid-March, there were North American investors in particular. And indeed, that's in orange here, that big ramp up in the amount of Bitcoin held by people in North America. And there's a big decline in yellow. That's Bitcoin held in Eastern Asia. So we see from mid-March, essentially a flow of Bitcoin out of Eastern Asia into North America as demand in North American markets really picks up and people in Asia decide to sell. And it's not just a story of North American investors. It's actually a story of institutional investors in North America in particular. And they've actually come in a little bit later in 2020. So you can see from this data here. Here we're looking at Bitcoin held by people who we can identify as investors who hold over 1,000 Bitcoin each. And what's fascinating is at the moment, they hold 40% of all the Bitcoin that's been held for less than 3 months. And in 2020, they increased their holdings by 173%. But actually a lot of that acquisition by these new large investors, that actually only happened since October. And you can see that in this orange line that's ramping up there. There was an increase in Bitcoin held by people with fewer than 1,000 Bitcoin and who've held for less than 3 months, but it really have been these new large investors driving up that demand. So we see these big trend breaks. Back in mid-March, an increase in investment, particularly in North America. And then as we get into the last quarter of last year, we see in particular these large investors come in. And that is the time that the price really starts ramping up, crossing over 20K, ultimately up to above 40, although we're back down to, I think, the low 30s at the moment. It's been a volatile day today. But what's interesting is it's not just these large investors who got involved towards the last part of this year of 2020. There were actually some smart buyers earlier in the year. What we're looking at here is the amount of Bitcoin that is taken off exchanges in withdrawals of more than $1 million. So there's people who are buying large amounts of Bitcoin, they're taking it off exchanges, keeping it in their own wallet, and they're doing that in large sort of single chunks. And what's interesting is they started to actually make these very large buys just after March of this year. And that's that first arrow on the left. You can see there was some smart money that got in and started acquiring Bitcoin in these large amounts. But then towards the end of the year, there was also this other ramp up in Bitcoin being bought via these large buys. And that is what has driven the price up in these last few weeks and months now. So really 2 phases of large buyers coming in. Some smart money perhaps earlier, and then some people potentially following the crowd, fearing some fear of missing out, coming and driving the price up towards the end of this year. And we've also learned a really interesting lesson in these last few weeks as price went above 20K. Remember, $20,000 was the previous all-time high set in 2017, towards the end of 2017. This time round, as the price went above that, older investors, people who'd held Bitcoin for oftentimes many years, they had kept their holdings fairly steady while Bitcoin was less than 20K. They were just sitting there holding, which makes sense. They got into cryptocurrency because they want to hold their Bitcoin for as long as possible, hoping for the highest price appreciation they can get. But once the price started to go above 20K, that's when we see these longer term investors start to draw down their holdings. And we see that Bitcoin shift to the newer investors, the people who've held Bitcoin for less than 3 months. So what I think happened is essentially all this demand that we saw towards the end of last year, coming from positive news stories of MicroStrategy buying Bitcoin, PayPal providing access to Bitcoin. We saw lots of demand coming in. The traders, that's the Bitcoin available to buy on the market, that's very liquid. You can see that in the pink line. That started to decline, so liquidity was coming out of the market, but there was more demand than they could provide. And come sort of October, November, all of a sudden, those longer term investors started to see prices that they were willing to sell at. And so they started to sell, but they needed those high prices. So the market hit a liquidity crunch, and that drove the prices up. The market did respond. And what we see here is really part of the supply curve of Bitcoin. It took an increase from 20K to 40K to get those longer term investors to give up about 1 million Bitcoin. So overall, this is pretty bullish. We saw the story of big economic shock in mid-March, a lot of demand in North America, really reflecting the maturity of the industry. We see a lot of demand coming from new investors, particularly at the end of last year, but also some smart money getting in, buying big from mid-March. And we see this particular event happening in November, when all of a sudden liquidity comes out of the market, the traders can't provide any more, the price starts to get bid up, and those longer term investors come in. So that's really an indicator that I think this is going to continue. But there are some downside risks. For example, recently, miners have increased their selling as the prices have gone above $20,000. So here, this is the amount of Bitcoin that goes to exchanges from the miners on a 7-day moving average versus the price. And you see that really big pickup in the amount of Bitcoin that miners are selling. Now, miners don't actually control that much Bitcoin, so they're not adding a huge amount of supply into the market. But they are typically people who think carefully about where the price is going to go. And so they choose to sell when they think they can take some good profits to cover their costs. And they have started to take that opportunity recently. The other key pressure, for me, this is really the most important metric to watch over the medium term, is there's a lot of new buyers who have experienced very large US dollar gains since they purchased. And some of them are now starting to actually realize those gains by selling their Bitcoin. And that's adding new supply back into the market and pressurizing the price. We can see that on this chart here. What we show here is the amount of Bitcoin that's being sent with this 25% or more US dollar gain since those coins were acquired. We've broken it out by age group. So how long has that Bitcoin been held? For example, has it been held for less than a month, 1 to 6 months, 6 to 12 months, or more? In fact, we've got a chart here going back to 2017. And you can see there are these periods of time where people who've held Bitcoin for less than a month but made really good gains, they started to flip that, which made sense. The price was going up very quickly. There were times that didn't cause the price to retreat very much until we hit that real peak at the end of 2017, where there was this big spike in the orange line with over 1 million Bitcoin that had made this large gain in a short period of time, was suddenly moved to be sold, and that caused the price to crash. If we go forward, to the right-hand side of this chart, we see that actually in the last few weeks, there's been that real ramp up in Bitcoin. It's had these US dollar gains for less than a month or 1 to 6 months, and that's increasing. And that really is the volatility that we're seeing today in the market as these people start to liquidate their coins. So if this continues, I'd expect more price volatility, even pressure on the price. So that takes me to the 2021 market outlook. I do think that there are strong conditions for short term, which I think of as days to weeks, and medium term, which for me is the weeks to months, price volatility. And there are certain metrics I look at to really understand this, and you can find them if you go to markets.chainalysis.com. In the short term, you want to see how much Bitcoin is going into exchanges, because that's being sent to sold. And then how much is building up on the exchanges? What are the balances? How much is just sitting there, waiting to be sold, hasn't been bought yet? There's also a measure which I call trade intensity, which is the ratio of the trade volume to the amount of Bitcoin that comes in on the blockchain. That's important because if that number starts to fall, it suggests that demand is going out of the market relative to supply. And all those metrics at the moment are flashing to tell us that there's going to be short-term price volatility. In the medium term, it's important to watch that Bitcoin cent at a 25% or more US dollar gain. That chart I just walked you through. You can see the historical precedent that makes me believe it's a good indicator for that. But while I think we're going to see some short and medium term price volatility, in the longer term, I do think there is support for the current price level. And that is because the supply remains highly constrained. The liquidity really has gone out of the market. Fixed supply of Bitcoin, not so much available from traders. And so if there's new demand that comes in, it's really got to bid up the price to get that Bitcoin from people who wanted to hold it for a longer period. And that's why I think it's so important to watch the amount of Bitcoin that's held by the new large investors versus Bitcoin that's held by traders. If those new large investors continue to hold their Bitcoin, that suggests supply is going to stay constrained. But if they start to recirculate it, if they start to sell it, then liquidity will come back in, and that could cause the price to fall. And indeed, in the last week or so, the amount of Bitcoin they hold has started to dip. But really the big question for this year is about demand. So I've taken you through the data that for me shows that Bitcoin really has ridden a response to the COVID crisis. It's really what has supported the price and pushed it so high. So of course, as macroeconomic conditions start to reverse, then we might see some weakness in the Bitcoin price. People who came into the asset as a hedge, if they no longer see the need for that hedge, they will sell. Of course, I actually think in the meantime, Bitcoin could find a broader use case. So that will continue to support the price even as that use case as a hedge starts to decline. So for me, the two key things to look out for there are whether people or investors have become comfortable with Bitcoin through this initial experience that they're having at the moment. So they decided to keep it in their portfolios after there's an economic recovery. I think talking to investors, looking at the data on how much investors hold, potentially some investor surveys will be key things to inform us of that. And then this final point, what is the likely use case of Bitcoin beyond just its use as a hedge in the economy at the moment? Well, Ethereum, the second most popular cryptocurrency, actually has been seeing all-time highs, in the last few days, and that's coming from its demand in decentralized finance. So this is, ways of borrowing money, creating leverage on the blockchain instead of through traditional financial intermediaries. There's a lot of innovation and speculation in this part of the market. But what's interesting is Ethereum really is the fuel for that activity. And demand for Ethereum to do that has really pushed the price up. Bitcoin, it is, as it were, the gold standard in cryptocurrency. It is the best collateral to use if you're going to be, lending. And so if Bitcoin starts to become more widely used in decentralized finance, we could see extra demand for Bitcoin, and that would start to push the price up. There's some technical innovations that need to be done to get Bitcoin into DeFi, but actually they're not that complicated. It's more a mindset switch. So I could see that could happen pretty quickly. So yeah, we're going to have some time at the end for some questions, but that's my summary overall of what I saw in 2020 and really what you should be watching in 2021. Now I'm going to hand over to Samantha to explain how you can learn more.
Thanks, Philip. I see some questions coming in. We'll make sure to respond to these via email. There are a few steps you can take if you want to learn more. First, you can get live insights and access metrics at markets.chainalysis.com. You can also subscribe to our market intel report using the link on the slide. This report is sent out every week and provides insights on market trends. If you want to learn more about how you can leverage the data for research, marketing, and investment decisions, get in touch with me or Jeff. Our emails are samantha@chainalysis.com and jeff@chainalysis.com. If you're still learning about cryptocurrencies, you can also take our Cryptocurrencies Fundamentals program. This program walks through fundamentals of cryptocurrency technology, industry actors, and helps teams discover the principles of blockchain analysis. Thanks everyone for coming to the session, and please feel free to get in touch with us. There will also be a recording of the session circulated in the next 48 hours. I hope everyone has a great day.